All right, I'm going to do today's report as a video, and I'm just going to cover the metals. I think that's where the um, potential is right now. We were watching this coil right here. These four tight days, we broke downwards out of the coil. I would like to have seen 3 down days at least. It seems like most coils will last anywhere from 3 to 5 days, but I don't necessarily think I would avoid the coil pattern simply because the breakdown only lasted 2. Notice just as soon as price got over sold, it bounced. That is um, characteristic of an intermediate cycle that is still in the advancing stage. Um, it, it looks to me, I'm going to show you next what I think is going to happen with the currencies, but it looks to me like the coil is trying to reverse. They haven't actually gotten up into this consolidation, back into this consolidation box just yet, so we don't really have confirmation that the coil is reversing, but it is a good sign that we're not getting a lot of follow through to the downside. The initial break has failed to produce any severe follow through, and as of today, we're trying to turn back up anyway. So I think we're going to get another leg up in the metals. So let me go over to the dollar next, and I'll tell you what I think is going to happen. All right, I'm going to start with the euro. Um, I noted this when it happened. There's just no natural scenario where a daily cycle tops on day 2. That's just not. It's so far out on the scale of um, probability that we're just never going to see that happen naturally. Um, so I've been saying all along that the ECB is going to intervene in the currency markets. They want to suppress the euro against the dollar, and they did. They did roll this cycle over prematurely, but there is a possibility where this entire cycle count can be or will have to be reworked. And in that case, this would not be a daily cycle low. The daily cycle low would be down here, possibly as a double bottom. Um, so the ECB is running into a problem here. There's support right here at this pivot, and it's not going to be easy to manipulate the market, the euro, below this support. There's going to be buyers here simply because stops are close, and you can see it's already happening here. We're getting these reversals, so buyers are taking a chance that a double bottom is forming, and they're buying in this zone, and that's going to make it harder for the ECB to continue to force the euro lower. Now let me move over to the dollar, and if they can't, then what happens is this gets negated as a daily cycle low, and the DCL moves down to here, uh, and that's definitely possible and in the works. Uh, with the Fed definitely going to cut 25 basis points, there's no way any of this happened naturally. Uh, the dollar should be going down into that rate cut. The euro should be going up, but um, the ECB would like to keep the euro suppressed against the dollar, so they've intervened, manipulated the currency markets, and pushed the euro down. And that has, let me convert over to the dollar. Okay, so what they've done is they've managed to manufacture this uh, powerful momentum move up into the rate cut, and they are hoping that this momentum is going to be enough to offset the fact that the Fed is starting a rate cutting cycle. Uh, as long as the Fed was hiking rates, it was a factor keeping the dollar propped up. That is now going away. The natural trend should be down for the dollar with the Fed cutting rates. And so the ECB has tried to, and they have succeeded. They've tried, to manufacture a strong trend up, uh, and they're hoping that this momentum will be enough to keep the dollar moving up and the euro moving down, even though the Fed is going to start a rate cutting cycle on Wednesday. So here's what I think is going to happen. This daily cycle is going to be on day 25 on Wednesday. That's late enough in the cycle. We've got resistance right here. This will be triple top resistance. I showed you on the euro, we've got support. It's not going to be easy for the dollar to go through this resistance with the Fed cutting, even if they're only cutting 25. And I think that's probably going to trigger at least a move down into a daily cycle low. So if we draw the cycle trend line here, the move into the daily cycle low, which I don't think the ECB will be able to stop, should at least break this trend line. So, I expect they're going to hit the markets hard tomorrow, probably push the dollar up right into this resistance zone right in here. But I don't think it's, I think they're going to have trouble breaking through this tomorrow. And then if they don't, and even if they do, I suspect this daily cycle in the dollar is going to top on that rate cut Wednesday. And, assuming that cycles can, function at least somewhat normally in a heavily manipulated environment, then price should come down at least far enough to break this trend line. And then that's the point at which we'll see whether or not the ECB can turn this back up, and we get a second daily cycle higher that does break through this resistance right here. So I suspect on the rate cut, the dollar is going to move down, and I think I can virtually guarantee Thursday morning the ECB is going to come back in immediately and try and turn the currencies back. I expect on Wednesday's rate cut, we're going to get probably a moderate to severe down day in the dollar, and then the ECB will come in immediately Thursday morning, try and turn it back up. I really doubt that they are going to succeed, and I think the dollar is going to come down and give us at least a daily cycle low that breaks this trend line. That should open the door for the metals to maybe give us that second leg up. So moving over to gold, you can see I think we had a contract rollover, which is part of this move today. But gold, it's just, even though the dollar is moving up, gold has not been breaking down. It's like I said in one of my video on the blog, I think metals traders have come to realize at this point that the currencies are just so heavily manipulated that a rally in the dollar really doesn't mean much of anything. It certainly doesn't mean that metals traders have to dump their gold and precious metal holdings anymore. And so I think maybe today that the metals are starting to anticipate that the dollar is going to form a daily cycle top on that rate cut announcement. And you can see here we're only about 60 points away from 50. I would think a move into a daily cycle low would last at least 8 days. And we're getting, kind of late in this daily cycle. We could get an 8 to 10 day spurt that could take gold up to that 1500 to 1550 level and then that gives us our um, possibly our second daily cycle top, and maybe our intermediate cycle top if the ECB is able to um, turn the dollar back up after the daily cycle low and the euro back down, and then we get higher highs in the dollar and lower lows in the euro, and then that would be presumably our intermediate cycle top in the metals, and then we get a corrective phase. But I think we're setting up for, and let me widen this chart. All right, I think we are setting up for one more explosive move on the rate cut that's going to take gold up to 1500, or more likely, in my opinion, I think we're going to test these pivots. They're coming in right around 1550 to 1520, maybe even as high as 1550. I think we're going to get maybe a quick 2-week explosive move up to this level, and then we're going to get our um, move down into the intermediate cycle low that's probably going to last anywhere from 6 to 8 weeks. So I guess just leave it up to each individual. If you want to get long before that rate cut in anticipation that what I'm outlining is going to happen, then tomorrow and early Wednesday is your chance to get in to positions ahead of that. We might get a fake out move on the announcement Wednesday. Maybe everything sells off really quickly, and then the buyers step in and it reverses before the close, and then we get that move up. But as of today, I don't think the rate cut, even though we're only going to get 25, I don't think that rate cut is going to stop the final move into an intermediate cycle top in the metals. I think we're going to test this. Miners could test the baby bull high. Silver, I don't know if silver is going to get an explosive move all the way up to 21, but silver should have a nice move as well. So you can plan accordingly, or you can just wait until after the rate cut. If we do get a false move and it does reverse, then I think that would be your cue to get in preparation for this last maybe 60 to 80 point move in gold before the intermediate cycle tops and we head back down. And I really don't know what to tell you as a stop for this. So here's my best guess, I guess. Let's just assume we've kind of had this false breakout. If we just kind of ignore that, we've still got this triangle trend line where gold broke out above it today. Maybe we use that triangle trend line, ignore this move, use this triangle trend line as a stop. So if you do get long and everything backfires, we don't get the move on the rate cut that we're looking for. If gold closes back below this trend line here, so let's say closes back below, let's just call it 1425, then maybe you use that as your stop. That it's not going to work. It backfired, and at that point you got to close your positions and get out. But I would use a closing price rather than an intraday, because we might get some wild swings when the Fed announces on Wednesday. We might swing below this, but then recover it before the close. So I think you're probably going to have to use a closing price rather than an intraday as your stop. All right, so that's what I think is going to happen. I think the ECB is going to try and build as much momentum as they can tomorrow. They'll probably hit the currencies hard again. That could push the metals down a little bit tomorrow morning, afternoon. That might be your last buying opportunity if you want to take a chance on this scenario playing out. All right, that's it for tonight, and we'll see what tomorrow brings.